Finally, some liquidity for the island of Puerto Rico coming to you now. Breaking news, DSCR loans are finally back on the island of Puerto Rico. Why is this so important? It's because it's just been super difficult to borrow against cash flowing real estate for the last couple of decades even. And now, with DSCR loans finally coming back to the island of Puerto Rico, we're going to see some capital get released. So there's a lot of pent up equity. We've seen property values kind of skyrocket over the last 5 or 6 years, and people are going to be able to refinance their cash flowing assets like long-term rentals. So if you hold a duplex, a fourplex, a 10plex, if you've got a 25 unit apartment building and you haven't been able to borrow money against it, you're now going to be able to quickly and easily borrow money using DSCR loans. And right now I'm going to take you to an insert from our masterclass that we recently did inside of Apex. What's Apex? Apex is our paid community where we do deals together with members. We network together, we learn together, and we actually do deals, guys. And we're working on something really big. We're working on a fund that we will be able to fund your deals. You're going to need to get in Apex now because the price will be going up as soon as we get this fund launched and rolling and we're able to fund people's deals. Anyways, it's a very exciting time to be in real estate on the island of Puerto Rico. Guys, things are going crazy. You're going to love this clip. Check it out. We'll see you on the other side. It's the Thursday night masterclass, guys, for Apex. Yeah, if you guys have people that you want to invite to this is a good one to let the world know what we're talking about here, because what we're talking about is super important for not just real estate investors who are in the States, but it's really, really important for what's going on the island of Puerto Rico. And you guys, you probably know, you follow me on YouTube, and we've talked about it on other master classes. Liquidity has been a struggle and a problem for the island of Puerto Rico for a couple of decades now. And these guys from Nexa are going to hopefully start to help to solve that problem.
I am from Nexa Mortgage, a brokerage, as we were all talking about. So I'm a loan officer. I work with 200 or some different lenders. We've got all kind of options. I'm going to go a little bit more into that, a little bit more of my background. I think I've been in mortgages for 10, 11 years now. For a while I worked, we did lines of credit, HELOCs. I moved over to first mortgages during the refi boom back in 2019, 2020, when the rates dropped. Did refinances for 4 years, saw the opportunity with the investor loans here, and made a jump over to Nexa to kind of widen my variety of options that I could give to my borrowers. And that's where I met Bar, who is our lead for our commercial loan team. And I'm going to go ahead and just kind of pass it over to him, let him chat about what we can do commercial loan wise. And maybe we can take some Q&A and get things flowing here.
Awesome. That sounds great. Hey, Bar, welcome.
Well, thank you. Thank you. I am part of the support team. I'm probably the lead guy over here on the team. I support loan officers like Brandon out there on the Nexa team, and we are actually lending all over the world. Obviously, the bulk of it is domestic, the United States, and we do anything commercial. So that can be, basically anything that's not for personal use. The one through four door single family, we can do as a commercial, and if it's an investment, we can actually sneak down into the one to four door range as well. But just to give you a wide variety of things that we're currently doing. Oh, let's see. We've got a cruise ship, $25 million cruise ship. Ground up construction, 288 apartments, a cannabis grow and distribution operation. What else? 5 or 6 restaurants, 2 churches, an airport, ground up construction of a resort in Mexico, refinance of a couple apartment buildings, 2 liquor stores, 3 private schools, a cash out refinance on that, a dude ranch in Texas, a cattle ranch in Texas, multiple car washes, just a wide variety of things. Oh, a solar farm.
Anything commercial?
Basically anything. We've got such a great group of lenders that we actually go after bank turn downs. So like if you were to go to your bank and say, hey, I wanted to buy a strip mall and something they didn't like about it, we actually have banks that send us those deals as well. So it's a pretty powerful way that we can leverage that.
I'm just thinking, as a real estate investor, do you guys ever lend on distressed assets, or do you do construction type perm loans or hard money lending, that kind of stuff? Or do you look for only seasoned value or seasoned cash flowing assets?
No, I mean, if there's a thought to make it work, or we've got a couple of lenders that are really, really creative. Obviously, if there's an issue with the property, then we start looking for other ways to get around that. Like, do you have property that we can cross collateralize? So yeah, there are definitely ways that we can work with it. And our philosophy is bring it to us and let us figure it out. And I would say we're like well over 99% where we can figure out a path forward. Whether or not it's doable for the deal, that's a different question. But at least we can find a path forward. Like one example is, hey, if this wasn't a distressed property, we do it at a 75% LTV. Now we may require it to go down to a 50% LTV. So there are definitely workarounds.
Okay. And have you actually done lending on the island of Puerto Rico at this point, or is this
Uh,
something that would be new?
I have not, but multiple of my lenders have, yes.
Okay. So you have lenders in the queue that have lent already on the island. Beautiful.
Yes. Yeah, they are very experienced when it comes to international.
And is there a particular deal size that fits, or something too small or something too big?
Oh, too big? No. This is one of those pie in the sky. I really wish we could land it, but the larger the deal, the harder it is to get together, and then even harder to fund it. But we were on a call about 6 weeks ago on a Saturday with a gentleman that was he's been working on this for over a year. So at some point, I'm hoping he gets it done. But he was trying to fund a $10 billion theme park in Texas, and we spent 2.5 hours on the phone with him on Saturday.
That would make your year, I guess, if you could close
Uh, I, I, I,
that.
I would probably own one or two islands somewhere. Yes.
Yeah.
So yeah, but as far as minimum, I mean, we've done one or two that are sub 100, but we really want them above that because, I mean, let's just be frank about it. As a lender, we're not going to make a lot of money on a small loan.
Yep.
So, you just have to be cognizant of the fact that when you get into those lower loans and you try and run it as a commercial versus a residential, there's some costs that are going to be involved in it. But again, there's going to be costs on either side. It just, like for those of you that are familiar with, like the Ohio area or Indiana, I mean, you can go out and buy a home for 40 grand, right?
Yep.
You're going to put some money into it, but those loans are out there. So you just have to be cognizant of what those costs may be when you get into lower numbers.
Yeah, and we have a similar situation on the island, right? Like we can definitely find single family homes that can be purchased for 30, 40, 50,000. Maybe they need a $30,000 renovation and their after repaired
Yeah.
value is 120 or 130. So those type of loans are probably be better left to do with a hard money lender or a cash partner. You guys would want the bigger stuff like four family and up, something like that. Although with DSCR, can you explain how DSCR works and what we should be looking for as investors?
Yeah, so the DSCR, that's a debt service coverage ratio. It's just a fancy way of saying the potential rent of the house covers the mortgage payment. So when someone's doing like a commercial loan or a DSCR loan, there's no income docs, no W-2s, no pay stubs, no tax returns. It's bank statements to show you have the cash for closing. It's an appraisal to make sure the property appraises for the value. And when the appraiser's out there, they're going to do a rent schedule, just to kind of find like a fair market rent for the neighborhood, for the area, for the zip code. And as long as that rent covers the mortgage payment, that's basically how the loan gets approved. Closing LLCs, they're simple loans to do. And those, we have different products there where those can go down to 100,000, 75,000 locally in the States. The more commercial, bigger deals is where we would defer that to the commercial team. I would still be the loan officer, but Bar supports me through those transactions since he has the direct connection.
So are you thinking you could do both, like a 1 to 4 family home that's maybe it's a $100,000 to $300,000 loan, DSCR, debt service coverage ratio loans for those smaller homes, and you could also do the bigger homes, like if we got a 10 or 12 family or 10 or 12 unit apartment building.
I think that's the sweet spot with what Bar's offering.
Bars
Okay.
looking for the bigger stuff, right? The half a
Well,
million and up.
again, I'm not the LO on it. That's Mr. Brannon. But as far as when it comes to the commercial end of it, There are a variety of things we can do, but I do want to clarify one thing. So in commercial underwriting, it's not as simple as what it is on the 1 to 4 door, like Brandon was describing. Because on a commercial loan, and I'll talk a little bit more about that, the underwrite is much deeper than on the 1 to 4 door DSCR. Even though that is a factor, a large factor in commercial. Like most of my better underwriters, they will look at it from an income standpoint, which falls back kind of like the DSCR. Like, will the revenue generated from that asset cover the payment? And if not, then what other compensating factors can we bring into it? But definitely in a commercial underwrite, we're going to want to see a resume to show some type of history. Like, have you ever been a landlord before? We're going to see your assets. We're going to want to know your liquidity. We're going to want to see like rent rolls. We're going to see P&Ls and balance sheets. So it is a full underwrite when we come to commercial. So it's not as simple as the DSCR when it comes to the single family, where they don't require a lot of those documentation. So
Hey guys, if you want to start raising your hand or putting questions in the chat, we can bring people up to the front too to ask questions. But while you're doing that, I have two that have kind of piqued my interest. Um, I have a portfolio of 20 rentals, all single family homes. Is there an easy process for me working with you to refi all of them out as one portfolio, and just do like one master loan, or is it simpler and better just to do each individually? That's how I currently have it.
okay, well, there's advantages and disadvantages to both ways. Obviously, if you do them one at a time, they're free, independent. You can sell them whenever you want,
Yeah.
right? Then again, you have 20 different loan processes to go through. Okay. If you do either a portion of them, let's say you group them in fives or threes or whatever you want to group them into, then those are all independent loans of each other. Because if you try and pull a house out of and that's basically what we call a portfolio loan with two or more. So if
Yeah.
you want to pull one out of a group of three, you're going to have to refinance the other two. So when you get into a larger number, like, hey, I want them all 20. Well, if you know that you're going to possibly not hang on to them for period of 7, 8, 10 years, then it wouldn't make sense, because now all of a sudden you've got 19 that you've got refi because you want to sell one.
Okay.
But again, if you group them, I've seen a lot of my investors that'll do that. Um, again, it just depends. It depends on what you think your long-term goal is. Like, I was involved in a deal, I don't know, 2 years ago, where he had 400 and change doors all up in the Pacific Northwest, and he pulled 30 of them out to do a cash out refi. But he knew that he was going to ride that for 5 to 7 years, and then he was refinance out of that again, and then start selling them off here and there.
Okay. And then my second question, we are talking about creating a debt fund. Do you guys offer any kind of leverage to funds that are out there, lines of credit, or loans to funds? I'm not sure how you would structure it, but do you have any products like that?
Uh, I've not myself been part of that, but yes, I've got one lender in particular that absolutely could do that.
Oh, what kind of rates and how would that work? Like, let's say we had I'm just going to make up a number here because we haven't done a raise. We don't even have documents, but a $5 million debt fund that's giving out hard money loans, and we've got, a couple $1 million out in loans. What kind of rates are we looking at, and what's the process and structure of getting a line of credit or something like that?
Yeah. And I'm going to apologize right now. I'm a broker, and I've been doing this a while, and every time I guess, I'm wrong. And I set some really false expectations out there. I actually lost a client over that once.
Oh
So
man.
I will politely bow out, because
Okay.
as smart and as intelligent and personable as Bar is, that is not Bar's lane to travel in.
Okay.
But and I will speak to one thing, though, that we have a quick intake process on any commercial loan, that we literally can have a 15-minute phone call. Say you called me up and said, hey, with Brandon, and said, hey, let's all jump on a call. Let's talk about, I want to cash out refinance 5 of my properties. Okay, great. We'd literally spend 15 or 20 minutes on the phone with you, gather the basic information, send you a short needs list, 8 to 10 documents that we need. You'd provide those to us, and generally within 24, maybe one to maybe 3 days, the underwriter will review it and get back to us and tell us about the structure of the deal, what it'll look like for terms. He may request one or two more documents just to solidify it, but after that, it's really here we go. So,
Okay.
we came up with that for multiple reasons. Like right now, my team, I think we have over 200 active commercial loans right now. So it's crazy busy. But in order to make sure that everything flows, we had to come up with a really good process. Because in the world of commercial lending, it's not as quick as the residential world. Like in the residential world, hey, we got a program, the underwriters know the program, and you fall into the buckets, we get you approved, and 25, 30 days later, boom, you're done. In commercial, a quick loan is 45 days. They can be done quicker, but the terms are not always so pretty. A typical commercial loan is 60 days. International, you could probably add a week,
Okay.
depending on if everyone plays nice and we don't have any weather issues or other things that pop up. We can get an appraiser to go out there. So there's a variety of things that can help delay it.
And what could everybody on this call do to position themselves to be underwritable? What do you guys like to see?
Great question. Great question. I love that. Okay, so first and foremost, where's your credit? I cannot tell you that people that come to a sub 700 and expect this 4.5 rate, and I'm like, first of all, I can't get a 4.5 rate. But second of all, why are you trying to be an investor if you have a 595 credit score? No, no. I mean, we've got a really large deal that's sub 500 that we're scrambling to get this guy's credit repaired.
Oh, wow.
It's just the number one thing that you can do is protect your credit.
It's
Okay.
so important.
You now are in a business that relies on that credit score. Okay. The second thing is make sure that you have your resume showing what projects that you've owned or currently own. Make sure you have really strong accounting and bookkeeping. I have one investor that just drives me crazy. Super nice guy. His name is Carlos, and he's out of Washington State. He owns about 45 rentals, and he commingles all of his funds into his personal account for all of them. What a nightmare that is. Yeah,
Ooh.
yeah. So I mean, just think about it. What is the underwriter going to need from me? He's going to need my credit. He's going to need to see who I am financially. Make sure that you have your tax returns, other stuff like that. Make sure your bookkeeping is strong, right? If you don't have a CPA, I would highly recommend that you get one, especially if you're going to start handling multiple properties. Or if you've got somebody that's strong enough on staff, or you're strong enough, just make sure that they're there and ready to go. The other thing is do your research. Make sure that you are looking at a property and it's priced right. Because once the underwriter gets in there, he is going to do a deep dive into that property. So whatever numbers you give him, make sure they're verifiable. You guys are all experienced investors. The time that you make money on a property is when you buy it. So make sure that all of your numbers line up. Make sure you have realistic construction budgets, rehab budgets. Okay, because a lot of times, we see them are like, there's no way you're going to rehab this property for $15,000, and we get those too.
Yeah.
And the other thing is make sure that you have reserves. Okay. You cannot go into a lot of these commercial transactions with no reserves.
Is there a ratio that they like to see?
I would say a minimum of 6 months would be where I would not want to go below.
Okay.
Mhm.
And that's for all your properties. So if you own 20 properties,
Yeah.
I know that may sound like a big number, but if you want to be in the strongest position, you definitely want to make sure that you have reserves. And they don't have to be liquid. They just have to be where you can have access to them. Like a 401k,
Bitcoin.
is acceptable. You just have to have some type of reserves.
Okay. Um, I had one last question, and then I'd love to open up to the group, guys. If you have questions, put them in the chat, and we'll pull you up.
I got one.
What was my last question? It was about the bookkeeping. And sorry, I'm my mind's flowing here. I run all of my properties through an LLC. When we're looking at these loans, do I need to provide my personal books and asset and liability T statements, or is it all just what I have in the LLC?
No, you absolutely will need to provide your personal, because if the business fails for some reason, they want to see how you can cover that.
Okay.
It just like, if you bring over a rent roll and it's fully rented, they're still going to apply a vacancy factor.
Yeah.
So again, these are kind of some of that stuff that's in the standard underwriting. And again, I'm not an underwriter. These are just conversations that I've had over the years with underwriters.
Awesome. Thanks very much, Bar. I appreciate it.
Guys, everybody's excited about the DSCR loans and liquidity, any kind of lending that comes to the island that's going to help real estate investors do more deals. I'll use myself as an example in this one. We've been on the island now for almost 7 years. We have a ton of pent-up equity. We've invested millions and millions of dollars worth of cash onto the island of Puerto Rico. We've got tons of cash flow, but we haven't been able to go and pull out that equity. Either we have to sell our properties or we just sit on them and sit on the cash. Now, we get really great returns, and I'm not complaining, but it's going to be awesome that I'll be able to go and borrow money against some cash flowing real estate and then go buy more real estate that we can fix up and make cash flowing. That way, we're going to provide more housing to the island. We're going to put downward pressure on rents and on resale. All kinds of good comes from the ability of real estate investors to be able to borrow money. But don't just take my word for it. Let's talk about it in the comments. And guys, if you like that clip and you want to be part of the conversation every Thursday as we do these master classes live, consider joining us on Apex. The link's in the description. You can join the Flip Flop Flipper community for free and get a taste, and then set up a call with me and we'll talk about whether or not you're a good fit for Apex. We want to do deals with people inside of Apex. We expand our business through partnerships. If you want to be part of the Apex team, set up that strategy call with me and we'll see if you're a good fit.